Hello and welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Good. Glad to hear it. We are financial advisors here at Jazz Wealth. Happy to help and happy to teach you here. Hope you'll check us out at jazzwealth.com. If your financial advisor is currently sleeping, golfing, or on vacation, hopefully you'll check us out because we don't know what any of those mean, actually. We actually do wine and wealth classes for clients each and every week. We've done some great ones here recently with some tax loss harvesting considerations, rental properties, and how to get tax deductions wrapped around that, depending on the type of property that you're focused on, and so much more. The digital dollar, the U.S. digital dollar, or the CBDC, which is what they're calling it at the moment. Details and a deep dive on that as well. If you're interested, scared, concerned, confused, you can go check that out. Let's talk about the markets here today. Focus on inflation. The inflation number pretty much solidifies that tomorrow we're not really going to have any kind of rate hike. We'll likely see a pause there. We got 0.1% on the headline CPI number. That means inflation only grew by 0.1% month over month. That puts the year-over-year inflation number at 4%. Remember, inflation is falling, but it is still going up. Right? So we see it less than it was. We were growing at 9.1%. Now we're growing at 4%. So the peak was 9.1% there. So inflation is now down. That'll be 11 straight months in a row. You have to go back to the Spanish flu to actually find a time where it fell more than that. There's only one other time in history where it fell more than 11 months in a row. And that is 1921. And that would be during the Spanish flu. It fell 12 months in a row. So we've never fallen more than that. That could be kind of interesting there. Basically, we did have a 77% chance, basically 76.9% chance of a pause in the Fed announcement that comes out tomorrow there. Now we're at 94.2% there. So pretty cool there. It could be the end of what has been 10 straight rate hikes in a row there, actually. And so then we go, well, what about the market? How's that going to go there? 5 of the 6 last Fed days, actually, the S&P was lower. If you take the average return of the last 6 Fed days, you find they have about an average decline of about 1% there. Days where there are no change, or they hold interest rates as they are, which is what we're expecting tomorrow, those are the most boring. So typically the market starts a little bit higher and sort of drifts around during the morning. Then we get to the afternoon rate decision, and there's just constant chaos and all that stuff. Well, when they hold rates, we tend to have that same thing up in the morning, just kind of floating around, whatever, and then a little bit of a sell-off at the end of the day, but really not much, right? It's just kind of a ho-hum kind of decision there. Like I said, the average performance of the last 6 was about a down move of close to 1% there. S&P is on the screen there. We're up about 13% year to date, and for the moment, it's holding its own. It's getting as extended or similarly extended as the NASDAQ is there. Now, remember, the big names are not supporting this move anymore. Today's a little bit different, but generally, over the last 1 week, the big names are not supporting it. We talked about this here before. I'm going to go one slide up here. If you take the 7 names, you create a portfolio. Year-to-date returns, 53%. Year-to-date returns without those 7 names, in other words, the other S&P companies there, 493 of them, you have a return of 0%. In other words, these guys did all the heavy lifting to create the gain of 11% in the S&P. Well, now you change that. You take a look here. We have that same portfolio is only up 47%. So some of those stocks taking a little bit of a break, and the rest of them are up 5%. So that added 2% gain at the moment has come all from those 493 or 95 stocks, however you want to look at it. That's because there's 2 classes of Alphabet shares. And so when you look at that, you say, well, that's good news, right? We go to the stock market. That's what creates these almost boring type up days where we just drift along like yesterday and today. When every stock, or as a whole, the S&P is participating, of course, that is a good thing. That's what you want to see if you are an optimist or a bull. In the NASDAQ, I do want to point out that the volume is half of the Russell 2000. And the Russell 2000's volume, which this would mean, is twice as much as the NASDAQ. So this continues to prove that rebalancing rotation that we talked about in the Jazz After Dark. I talked about it with clients and everything to show that money is going to and has been coming out of the NASDAQ. That doesn't mean the NASDAQ has to collapse, because we're not leaving the NASDAQ. We're saying, well, we have an overgrowth in our position of the large cap tech stocks, right? We got to take that money out. When you rebalance, that money automatically goes to the small caps in this case for how it's happening this time of year. And so that's the reason for this rally. Right here. You can see it. So Russell 2000 sitting at about 8% gains here. And I'm not arguing with the 8% gains there. And you certainly can't take anything away from the NASDAQ just on a tear here still. But you have to know that there's less volume moving that market up. Whereas in the S&P, it's consistent volume moving it up. In the NASDAQ, less volume. That means that's like a rocket ship being shot higher on less and less fuel. Well, it's got to stop eventually, right? Hopefully before it or after it gets out of the atmosphere. But you get what I'm saying there, that money going over to the Russell 2000, which leads you to believe that pullbacks in the Russell 2000 should be something to look at, right? Something to consider. As we look around the markets here, you've got crude oil up about 3% on the day. Strong today, but hard to say strong overall, right? Kind of difficult because we're still in a downtrend. We're still not really accomplishing anything there, and that's fine. Interest rates moving back towards those lows ahead of the rate decision tomorrow, and that's, not the best of news if you are shopping out there. You got interest rates near the highest points that they've been and refusing to really bounce off of those lows there. Gold continuing to pull back. We talked about this here and here, where we said gold has these moments in time. You do not chase gold. Everybody and their mother was asking about gold to combat inflation and all that stuff. And so you can't do it. You're too late. You missed it. We showed all that data to show you've got to be early to gold if you're going to invest. If you catch it after it's already gone up, you're too late. And so far, the last couple of weeks have proven that. So I love to show that stuff ahead of time instead of saying like, I told you so. See, I can tell you I told you so later. All right, let's go along here. A couple stocks in the news here. Accenture, we happen to own it, so we're happy to see it moving higher there. They're going to, this is a big, they're going to invest $3 billion in AI, so they're waving their hands up there going, don't forget us. Hey, AI, everybody's excited about that? Oh, we're in it too. Don't forget about us. We're going to bring our AI developer headcount from 40,000 to 80,000 people. 80,000, where are they finding these people? Incredible, huh? So that's what's going on there. I'm not going to argue with them because we own the stock. We're happy to see it move higher. Chubb. They're buying back $5 billion, which if I could look, that's about 6% of their total net worth there. Yeah, about 6% there. So a little bit of a gain here for them today, just about 1%, basically in line with market performance for the day. What was not was Chegg. Now, these guys shot themselves in the foot the other day when they said AI is going to be the death of us. I don't know why you would say that, but that accounts for this thing right here. Right? That's why that happened there. They're going to cut their staff by 4%, though. So they have this perception of like, we're just giving up. It's a weird one. And Cody, can we hear you over there? No, that's the loudest I've ever heard you talk. Netflix hitting new highs here today. They are working on a live stream golf tournament. Did you know that? I got something on you. So Netflix says we're going to do a celebrity golf tournament, but we're going to live stream it. And so they're going to edit the whole thing in real time. They're going to just somehow make this thing work. Just kind of cool, which I guess like PGA Tour does that anyways, right? But not well. Netflix doing that there. I'd be curious to see who the celebrities are. You got to know it's probably some of the big names, Charles Barkley, people that are already out there playing, you know. They got the money, so more on that to come. We'll see. That was good enough to move the stock here to new highs. And remember, Palo Alto, these guys are taking the place of Dish Networks in the S&P, and that will be happening late next week. Mid next week, June 20th, actually, is when that'll take over. Jazz After Dark, if you want to join us here tonight, we're going to talk about 4 very interesting retirement tips for those of you that are in your 50s. It's a whole different animal. You guys that are in your 20s and 30s, you don't know. You can't relate. I'm right in the middle, so I could take both sides here. We're going to go over the specific things to consider there, how you go about it. So grab a drink, come hang out with us there. Yesterday, we did some retirement tips as your income grows, right? How to focus on that. Some things that I see people getting in trouble with. We've got all kinds of good stuff there. We analyzed the Realtor.com data there. We talked about this rotation from large cap to small cap before it started to happen there. We've done covered calls, how the debt ceiling works, all that stuff. We've just, constantly covering stuff there. So hope you learned something today and hope you learned something overall. We possibly will be doing, are we doing this live anymore? Like real live? We're done? My choice. We're working on upgrading the whole sound card and stuff in here so it's a better experience. And if we gain the confidence, maybe we'll do it. But for the moment, you have a lot to learn. You got a lot to take from this market. And by the way, the rest of the week, rather interesting because we got that Fed decision there. We go into the end of the week with digesting all of that in the bond market and gold and the stock market that is already getting extended. So it should be pretty exciting. We'll be around to cover it and you enjoy the rest of your day.